In this video, I'm going to show you exactly how I make several $100s in just 10 minutes of time. Depending on your experience level, you may not understand everything that's on the screen, and that's okay, because not only am I going to do a live demonstration in real time, but immediately after that, I'm going to break down every single item you see on the screen down to a beginner level. People typically charge between $1,000 to $2,000 to buy a course just to show you what I'm about to show you for free. It's taken me over 10 years of learning to perfect what I'm getting ready to show you in this video. We're going to be breaking this video into 5 parts today. The time is now 8:23 and 30 seconds, and the date is Thursday, January 16. As soon as we hit 8:30, we're going to jump right into live trading as the first part of the video with real money. And then after about 10 minutes or so, we're going to go over the profits from each trade from today, so you can see exactly what I paid and what I sold it for. After going over the profits, we're going to go over the tools that I use to trade, which you see here, these 2 big boxes. After the tools, we're going to talk about the indicators that I use to guide me to make profitable decisions. And last but not least, you're going to want to stick around because we're going to talk about exactly what I saw on the screen today that actually triggered me to make a specific move, whether that's buying or selling. If you're new here, welcome. My name is Ace. If you're not new, welcome back. I love to share financial information to help you improve your situation. And if you like that, be sure to subscribe so you don't miss out on future content. Investing in the stock market can be risky because you can lose money. I'm not a financial advisor, so I encourage you to do your own due diligence before making any investment decisions. My goal here is to show you how I do it and show the principles that I use to help me secure profits every single day. So go ahead and learn everything you can and apply what you like to your own situation. Outside of just day trading, I do suggest, if you haven't already done so, to start investing in the stock market for the long term. So if you're interested in that, I'll link a special video I made all about that right here. We're going to be buying option contracts today, which just means instead of owning shares in a company, we're going to own the right to buy 100 shares for a particular strike price in the future. The only difference here is that we're not actually trying to own the shares in the future. We're just trying to pay a premium for a contract, or in my case, 10 contracts, and then sell those 10 contracts for a higher premium minutes or even seconds later. The reason why a contract would increase in value so fast is 2 reasons. The first reason is as the share price of a company moves up, call contracts generally go up with it. In our case today, that movement is fueled even more by selecting an expiration date. You'll see here we're going to be trading NVIDIA options, and we're going to choose an expiration date that expires tomorrow. And we're going to be buying 10 contracts. And we're going to be selling out of them 2 at a time. And the contracts that we buy, they're going to cost around $1,500 each. And the way we make them cost that much is by moving the strike price. So you'll see as we get closer to 8:30. You may not understand what any of this jargon actually means, but just bear with me through the 10 minutes of trading and I'll explain everything right after. For now, what you're going to want to pay attention to is this chart over here. You're going to want to pay attention to if the price is increasing or decreasing. This is the share price over here. And then you're going to want to watch this box right here where I'm going to be buying 10 contracts at a time at a cost of about $1,500 each. This box here, you're going to want to pay attention because this is where you'll see the order go pending after I submit it. If the order goes through and is accepted, you'll see in this box over here that I own 10 contracts of NVIDIA options. After I own the contracts, you'll look back over here to see if the price is moving. And then you look into this box here to see me actually selling the contracts. And if I put an order through to sell contracts, you'll want to look at this box over here to see those sell orders go pending. And if any of those orders get accepted, you'll look back at this box here where you'll start to see the number of contracts that I own start decreasing. After I'm all sold out of all 10 contracts, we'll go over the profits that I made on each trade. So as soon as 8:30 hits, which is about a minute from now, we'll get started. The time right now is 8:28 and 48 seconds. So as soon as 8:30 hits, you'll see me start to move the strike price, because right now it shows the premiums are 2,600 and that's too steep for me. So I'm going to be moving the strike price accordingly to get this premium down to about 15, maybe even 1,600. 3, 2, 1, bingo. All right, so we own 10 contracts at 17.35. All right, let's see here. See what the price wants to do. So we bought some more at 16.75. So we have an average of 17.05. 20 contracts at an average of 17.05. So we'll sell out of 10 of them now here. So we got out of 10 of them, and now we still own 10 at average of 17.05. Sold some at 17.29 and sold, let's see here. Sold some at 17.29, sold some more at 17.28, and then sold more at 17.38, which you'll see here. So we got 4 contracts left, and we're trying to sell them for as close as possible to 17.50. And again, as soon as we're done trading here, I'm going to explain what everything, as soon as we're done trading here, I'm going to explain what everything means in this box and what everything means over here. And more importantly, what has triggered me to do these specific moves in order to make this money. Because if you don't understand that part, then you're just kind of guessing, right? So we're going to go over that so you can see how to consistently make money in the stock market. All right, so trying to sell. Okay, so we just sold 2 more at 17.55. Holding on to the last 2 contracts here. We probably made already on the day at least $200-300, maybe even more, but we'll go over that in just a second. As soon as I get rid of these last 2 contracts. All right, I'm gonna go ahead and get rid of them now. Let's see. All right, so we just sold out of 17.16. I did not like what I was seeing on the screen there. You could see that it wasn't sure if it wanted to go up, and it was actually kind of moving down. And you see after I sold out for 17.16, we're all the way down at 16.78. So that just comes from more than 10 years of trading experience and just kind of what other people would call just reading the chart. So let's go over here and see how much we made today. All right, so we bought 10 contracts. Let's see here. All right, so we made a total of how many transactions today? 1, 2, 3, 4, 5, 6, 7, 8. 8 transactions, right? And this is what we did. We bought 10 contracts for $17.35, right? As the price was moving down, right? And it moved. When I bought the 10 contracts at $17.35, I believe the share price was around here. If you look to the right over here, you'll see what I'm talking about. I believe the share price was around 138. And as it dropped more down here to the 137.50 mark, right? I bought 10 more. Why did I buy 10 more? This is the reason why. If you look here at this chart, which I'll explain what this chart is in just a second, you can see that there is a trend. And here's your trend that started yesterday around, it shows around 3 o'clock in the morning. So here's the trend. All right, so there's your trend. So what this line means is that when the stocks move, it generally moves along as a trend. That's why exactly at, what time is this? Over here it has the timestamps, right? So at 3 a.m. it started this trend. It went up, went down and tested the trend line exactly at, you'll see it says 11:50 at night. And then it went up and it went up. and kind of just dilly-daggled. And then this morning it wanted to test the trend again. And that's how I knew that I had strong support here to go ahead and buy again. So we had 20 contracts within 1 minute of opening today. We had 20 contracts, right? At an average, if you average these two together, this 1735 and this 1675, if you add those two up together, divide them by 2, you come up with an average cost, right? So I own 20 contracts at an average cost of 1705. So as soon as I got the opportunity to sell out of 10 of them, which is half my position, I did so, right? So at 8:31:08, it says 9:31 here because these are Eastern times, but really here centrally we're 8:31:08. So why did it go back up to 1705? It went back up because the share price moved back up, right? In this blue line here. So at this point, when I sold those 10 contracts, I realized a loss of 310, which is not really a loss. The reason why it shows a loss is because it's going off of this 1735 price here, and it's basically subtracting 1735 and 1705. So it's subtracting 10 contracts at 30 cents each, which is technically a loss of 310. But then that means that the remaining 10 contracts I have, instead of averaging me at 1705, it averaged me at 1675. So anyways, at 8:31:15, we saw the price start to move up. And what you want to do when you're trading stocks is you don't want to get greedy and wait till it goes up really, really high. As soon as you see some profit, you want to start taking some of that. So I sold 2 contracts at 1729 premium, just maybe about 10 seconds after selling 10 contracts, right? So how much did I make off of this sell right here at 8:31:15? We come over here to the realized gain loss, and you can see I made $100 on that sale, right? So I had 8 contracts left at that moment, and about 2 seconds later, I sold 2 more contracts at 1728. And how much money did I make off of that? $103. And then I had 6 contracts at that point, and 10 seconds later at 8:31:27, I sold 2 more at 1738, right? And how much did I make off of that? $123.86. And then I had 4 contracts left at that point. We waited about a minute till the premium hit 1755, and I sold 2 more. I actually put in an order to sell them for 1743 or higher, and the broker actually found me a buyer to buy it for 1755, which is going to happen, especially in the opening minutes of the day, because there's so many buyers and sellers. Instead of the broker just finding you a buyer for 1743, they're always going to look for the highest bidder of your sale. So on that trade, I made $157. And at that point, I had 2 contracts left, which I waited for about 26 seconds. And then I could see that the price wanted to die. I talked about that earlier. So I went ahead and got out of the last 2 contracts at 1716, which made me another $79. So in order to come up with a total gain for today, we're going to add up all the green and we're going to subtract the red. So here we go. So $79, $157, let's start that over. 79 plus 157 plus 123 plus 103 plus 105 minus 310. So $257, made that in 2 minutes and 46 seconds. In order for me to trade properly, I'm going to go over the tools that I use today. The first tool is going to be a charting tool, right, which is over here. And the next tool I use is an execution tool, right? Charting helps me know when to buy and when to sell. And execution, this whole box, this whole window over here, actually puts my orders through. If you already have a chart that you like to use, that's perfect. Go ahead and use that. If you don't have a chart that you like to use, you can download this. This is called Think or Swim, and you're going to download it through schwab.com. If you have an execution software you already use, great. Just continue to use that, because the principles that I'm teaching you today will apply to any software that you use. And it's better off that you use a software that you're already comfortable with and that you understand. If you don't already have an execution software, you can use the one that I use. It's called Street Smart Edge, and it's offered through schwab.com. So let's go ahead and go over what's on the screen over here. We're going to see a lot of blue lines and red lines, which are actually called candlesticks, which just are termed for a period of time. The blue candlesticks are going to be when the price started, like for instance, this candlestick right here, right? This is blue because the price started lower and ended higher. The candlestick on the left, it's red. Why is it red? Because the price started here. If you look over here, the price started here on this 1 minute candle at 138.63 and ended that 1 minute period at 137.53. Now, you'll also notice, if we look a little bit closer, you'll notice these little skinny lines, right? What are those? Those are called wicks. And wicks just indicate that although the price didn't open or close at a certain price, at one point in time during this 1 minute period, it did touch this certain price, which is 137.30. So from looking at this candlestick, I get a lot of information. The information that I get is at 8:30, if we look down here, at 8:30, the price started off at 138.64. At some point went up to 138.73. And because of this wick down here, at some point it went down to 137.33. And because this candle is full right here instead of a wick, I can tell that at the end of this 1 minute period, the price ended up at 137.51. I learned all of that just by looking at this candle, and you will too once you start to understand what I'm trying to explain to you. The biggest takeaway is wicks are just important because we as traders, we get to see the range of what a stock has traded in. Now, let's go over the difference between the 1 minute chart here, the 10-minute chart here, and the 24-hour chart here. Now, why is it important to have 3 different charts? The reason why is because as a trader, I'm looking at trends and I'm looking at support and resistance. So let's take a look here at this 24-hour chart. This 24-hour chart is nice because I can see over the past, since 2024, so for the entire past year, I can see how this stock is trending. And I'll just draw a line so you can see what I see. So I see a trend that started, if we look right here, I see a trend that started January 3rd, January 2nd, 2024, and it goes like this, right? Now, why did I draw that line specifically there? Because you can see the price went up, 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 and kind of tested the trend line, and then went up, 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 and then tested the trend line, and then went up, 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 and tested the trend line, up, 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 and again, tested the trend line, up, up, again, tested the trend line on, if you look right here, we tested the trend line on January 13th, which was Monday. All right. So that's why I have this 24-hour chart here, because it gives me an idea of what NVIDIA may or may not do. Now, past movements don't 100% guarantee, right, future movement. If that was the case, we'd all be millionaires and billionaires, right? But that's not the case. The stock market does move sometimes in a way that we don't understand. We just need to understand if it breaks the trend line, we could be possibly moving in the opposite direction, which is downwards, right? Now, why do I have this box right here? This is called a 10-minute chart. And a 10-minute chart allows me to focus, instead of focusing on the entire year, right? This 10-minute chart allows me to focus on what's happened during the past 8 days, right? And so in the past 8 days, you can clearly see there was, if you look right here, starting on the 8th of January, which was Wednesday last week, we were actually trending down. Look at this trend line here. See that? See how it touched and then went up, touched and then went up, touched and then went up, right? And then at some point, the trend was broken and we started heading upwards, right? See this trend, it touched the top of the trend line, went down, touched the top of the trend line. This is January 10th, right? Let's see what day that was. So on the 9th, we actually had a day of silence for our late president, Jimmy Carter, bless his heart, lived to, I believe it was 100 years old. So we didn't trade on the 9th, but we did trade on the 10th, which is right here, right? You can see that the trend is moving down, down, down. At this point, you can see the trend, it's broken at the end of Monday, right? What happens? It moves up, right? It moves up, and now we start heading toward this upward trend. So it's good to see what's going on, not only in the past 12 months, but it's good to see what's going on in the last 8 days, which brings me to my next point. Why do we have this minute chart? The minute chart is good to know what's going on in the last several hours, right? So that's why I have all 3 different charts. So hopefully that explains a little bit of why I have 3 charts instead of 1. So let's go further and let's talk about what some of these little smaller items mean, starting from the top to the bottom, left to right. I'm going to touch on just the important things. You can get overwhelmed by trying to learn too much in one day. So let's just start with the important things, which is the name of the company, which is going to be right here. It's NVIDIA, right? Sliding right, we see here that each candlestick is denoting 1 minute period of time. Underneath that, if we slide down here, we can see again, the name of the company, right? And the date, right? And a timestamp over here. And then if we keep sliding over, depending on which candlestick you have your mouse over, it's going to show you what was the highest price that it touched, what was the lowest price that it touched, right? And a very important thing to take away from this video is how many shares were traded. That's this right here. That's what volume means. During that 1 minute period of time, it shows that at January 16th at 5:57 a.m., the highest point the share touched was $138.69. The lowest point was $138.64. And during this 1 minute period of time, 3,267 shares were traded. I hope you see where I'm reading that off of. It's just to the right of where my mouse is located, right down here. Coming over to the left side, we see 4 boxes here, and I'm going to go over every single one right now. So at the top left, we can see what I had it on was the order status window. The only reason why it's on this gain loss window is because earlier I explained how much money I made on each trade, but typically I'll leave it on a order status. So let's go over and do that now. All right, so order status window. This just means when I go to make an offer or buy or sell something, it's going to show up in this window as either open, filled, or canceled. As you can see, most of the orders I put through got filled, right? This one says canceled, and that's okay. That just means at one point I tried to sell 2 contracts for $17.44 and it didn't fill right away. And in my opinion, the way I trade, if it doesn't fill right away, I like to cancel the order instead of leaving that order pending. Because in my opinion, when you leave an order pending, what it does is it's giving too much information to everybody else on the market. It's letting them know that you are willing to pay a certain high price, right? So that can be used against you. So that's why I cancel that order. And then 18, 17 seconds later, I put out another order after I saw the share price increasing. So that's a little game that I'm putting you on to right there. So let's go dive deeper into this box, right? This box actually will show the name of the company that I'm trading, right? It's showing you whether I'm trying to buy or sell, and it's showing you the number of contracts that I'm trying to purchase or sell. And then also it's showing you the order price that I'm trying to buy or sell at. And then lastly, this is very important because this box right here is showing us what it actually got filled at. And then obviously the date that I put the order through and the time that the offer was submitted. Coming over here to the right hand side, you're going to see a box that just talks about what current positions I have open, right? As you can see, I have 6 option contracts currently open because I do long-term investing for QQQ, which we won't go over on this video. It's not important for this video, but earlier you could easily see the contracts that I had open for NVIDIA if you just rewind this video. It's definitely very important to know at all times how many shares or contracts you're holding at any given period. Below that, we have 2 execution boxes. The top one I use to sell out of, and the bottom one I use to buy out of. I could easily just get rid of one of these boxes and use one box to buy and sell. But I just don't like to do that because then I can get confused and try to sell when I'm trying to buy or buy when I'm trying to sell. So starting with the bottom box, we have the company name in the top left-hand corner. Next to that, we have the price that the shares last traded at. So right now, NVIDIA is trading at 137 and around 60 cents. Next to that, in the green, we have how much the share price has moved up in terms of dollars and how much the share price has moved in terms of percentage from yesterday. So this is telling us that NVIDIA has moved up by 1.11% since yesterday. Now, if we skip down and we can see the expiration date, this is very important when it comes to options. And I'm going to go ahead and toggle through this and kind of explain to you. So let's toggle this to next Friday, January 24th, and you'll see what happens to the bid and the ask prices, which, by the way, since we're touching on that now, bid just stands for out of everyone that is trying to buy this contract, who is bidding the highest, right? At this moment, the highest bidder in the entire stock market is bidding $16.55. And since there are 100 shares in each contract, that really means they are willing to pay $1,675. Same for the ask. Out of everybody in the stock market, the person that's willing to sell theirs for the lowest price is selling it at $1,670. Again, the reason why I'm saying $1,000 instead of $16 is because for each contract there is 100 shares. So to figure out what that means, you just multiply this number by 100 and you come out with 1,680. The biggest takeaway to learn about the option contracts expiring on a certain date is the further out you go, let's say we go all the way out to June 2025, right? The further out you go, the less and less it matters how the share price is moving at the moment, right? If we look at, let's say, January 17th, right? And let's keep the strike price at 121. If we look at this date, if the share price of NVIDIA moves by 50 cents right now, these contracts will move by a whole like $100, either up or down, right? But if we change it to June 20th, 2025, right? Because this date is so far away, if NVIDIA moves up or down by 50 cents, these absolutely will not move by $100. They might move by $20 or $30. So that's just a takeaway to learn about the significance of choosing a certain expiration date. The next box over is what we call the strike price. And when you're buying calls, the lower the strike price, the higher the premium will be. So let's move it to 110 and you should see these premiums move higher. So I'll click on 110 and you see the premiums just popped up to $3,500 each. Now, over the 10 years plus that I've been trading, I've just found that a comfortable premium amount for me is $1,500. So that's why earlier, 26 minutes ago, I found a certain strike price that would make the premium cost around $1,600. Everyone's situation is different. Maybe you like to trade options where the premiums cost $500. In order to find that, you would just take this, right? Doesn't matter which execution software you're using, you just change your strike price and move it higher. So let's try 130, and bam, you're at $780 each. And if you wanted to get down to 500, you could switch it even higher. Bam, 133 strike price. Now we're trading contracts $500 each. So this may work out perfect for you, just depending on your situation. Next to the strike price, we have the type of option. If you buy a call, that gives you the right to purchase 100 shares of a given company for this particular strike price, no matter how high the share price moves in the future, right? My goal today was to buy a call option with a strike price of 121, right? With the premium of earlier, how much did I pay? I paid $17.35, right? And that was when the share price was trading at, it was around $138, right? Then if my goal was to obviously make money. How do I make money? I make money if that share price moves from 138 up to maybe like 138 and 33 cents. When that happens, my goal hopefully was the same premium I just paid $17.35 for to move up to $18.35. So there's $100 difference. But if you take that $100 difference and you times it by 10, I would have made $10,000 within, I'm sorry, not 10,000, but 100 times 10, which is $1,000. And I would have made that in about 2 minutes of time. As you know from earlier, I made 257, which is not bad for 2 minutes of work. Coming over to the right of that, we can see this right here, which is the bid and the ask, which I explained what those mean earlier. And let's go down here and explain what this box means right here. So buy to open just means we want to start a position by buying options, right? And if you skip down here, sell to close just means you want to sell all or some of those contracts that you already own, right? And then if we move over here, right, sell to open, that just means you wish to sell options to someone, right? And then if you go up here, buy to close, that just means we already have options that we have sold to somebody. And we now just wish to get out of some or all of those contracts. Moving over to the right, we have order type, right? Because I'm not going to explain this because this is pretty obvious what that means, right? How many contracts do you want to trade? So let's move over to what might not be so obvious, the order type. Now, there's so many order types here, but I'm not going to confuse you. I'm just going to go over the two main types that people really need to understand, which is market and the limits. And market order just means when you go to buy something, the executing company will automatically search for the lowest asker, right? The lowest asker if you're trying to buy something, or the lowest bidder the highest bidder if you're trying to sell something. That's what a market order means. Now, a limit order, however, is when I tell the executor broker, right? When I go to buy something that, yes, I want to buy this many options, but I don't want to buy a single one of them unless the price is above or below a certain amount, right? So that's what a limit order is. Now, for me, typically, I don't use market orders. When I first started trading years ago, I did use market orders, but I saw that I would be taken advantage of sometimes. So now I just use limit orders. Let's move over here. Obviously, limit price just means if you put in a limit order, this is the price that you don't want to purchase any shares or contracts above that. Or if you're selling, you don't want to sell any contracts below that, right? So that's pretty obvious. So let's go over to something that's not so obvious. This timing right here, right? What does this mean? I typically leave it on day. I'm not going to confuse you what all these others means, but day just means that your trade will go through immediately if you submit it between the normal trading hours. For contracts, for option trading, that's going to be 9:30 Eastern to 4 p.m. Eastern. Now let's talk about why I traded Nvidia today. Since it's one of the biggest companies in the world and it's valued at over $3 trillion, I feel comfortable trading it. It has the liquidity that I need. The chances of it going bankrupt overnight are a lot smaller than other companies. Also, in order to quickly get in and out of trades, you want to be trading something that is traded very, very often. At around 200 million shares traded per day, Nvidia provides some of the best liquidity in the market. I can just kind of show you just today alone at 8:30 in 1 minute. If we look right here, in the very first minute of trading, it had 3,300,000 shares traded. Even right now, as we're talking at 9:02, we can see that 648,000 shares were traded. Since we're on the subject of volume and liquidity, let's talk about why I only trade the first 10 to 30 minutes of each day. So let's go ahead and change this to a 5-minute chart so I can kind of give you a visual while I'm talking. All right, perfect. And since we haven't completed a full day today, I'm just going to go and talk about yesterday. All right, perfect. So these blue lines right here just denotes how many shares were traded within that 5-minute period, right? As you can see, I'm just going to draw a line so you can kind of see what I'm seeing. As you can see that as time goes on, during the first 5 minutes, and you can look right here to see what I'm reading off to you. During the first 5 minutes, 6,900,000 shares were traded of Nvidia, right? And you go right here, the very next 5 minutes, that amount gets cut by 1 million shares. And as time goes on, it just gets worse and worse. So at between 8:40 and 8:45, 3,700,000 shares were traded, and it just gets smaller and smaller as time goes on. In my experience, I've noticed that after about 9 a.m. Central, the risk to reward is just no longer worth it for me. And you can end up doing what's called over trading. So I'm putting you on to game right now. You can absolutely trade all day long if you like to, and you can make money, but the likelihood isn't as high as if you just keep it to the first 30 minutes. Because not only does volume get lower, but something else happens as the morning gets later. In order to understand what happens, you have to understand what front running means, AKA order flow purchasing. So I'm going to give you a real world example just to give you a visual, right? This is just an example just so you can kind of picture it in your head. So let's say, for example, you go to Target and you find some toothpaste in the aisle. You bring it to the cashier. The cashier rings it up for $6. As you're pulling out your credit card, right? And before you swipe it, within a half a second, the cashier runs out of the store. Well, actually, before he runs out of the store, he goes and puts your toothpaste back on the aisle, right? Then he runs out of the store. He drives to Walmart. He buys the same toothpaste for $5, drives back to Target where you are, and then hands it in front of you, and you end up paying $6 for it. All that happens in a millisecond, and it looks smooth. You can't see any of that happening. You don't see him driving to Walmart. You don't see him driving back to Target. All you do is you see what you think is the same tube of toothpaste, and you're paying for it what you should be paying for it, right? Because it said it cost $6 when you were on the aisle. But what you don't know is the guy who was supposed to be just ringing it up for you actually went and bought it for $5, came back, made $1 off of you. He made $1 off of knowing that you wanted to buy that toothpaste right at that second. So because he had the knowledge of you wanting to buy something, he profited off of that knowledge. This happens every single day in the stock market, but people like you can't do it. People like me can't do that because we are what they call retail traders. So the reason I explain all that is because at 8:30, that's when the volume is the highest of the day. The ratio between retail traders to the front runners is most optimal for me and you. Why? Because the ratio is, I can't say for sure, right? It doesn't matter what the exact ratio is, but let's say, for example, it's 50-50, right? Half of us are retail traders and half of us are those front runners at 8:30. What happens at 8:40 is not only does this volume decrease from 6 million to 3 million, but something else worse happened. The ratio between retail traders and front runners, it gets worse, because now instead of 50-50, now we're at 60-40, 60% front runners and 40% retail. So as we go on, move all the way to 9 a.m., the volume has now dropped. If you look right here, it's dropped to 3 million, right? Which doesn't look too bad, unless you have the experience that I have to tell you that at 9 a.m., the ratio between retail traders and front runners, it's no longer 50-50, it's no longer 60-40. At this point, it's probably 80-20, 80% front runners and only 20% retail traders. And it just gets worse and worse throughout the day. Now, towards the very end of the day, if we fast forward here to 2:30 Central, you'll see the volume kind of gets better, right? I just don't trade the end of the day, even though the volume gets better, but that's just personally what I do. You can choose to trade at the end of the day if you like to. So now let's talk about why I trade options versus shares. So for that, I'm just going to pull up a little Microsoft Word so you can see here kind of an illustration. So let's say I have $1,300 and I want to make some money today, right? I have two options. I can buy shares or I can buy options, right? So let's say I want to buy shares of NVIDIA using that $1,300, right? So, and let's just say NVIDIA shares are trading at 130 bucks. So what does that mean? That means if I want to spend the entire $1,300 on NVIDIA shares, I'm going to buy 10 shares each, and they're going to be $130 each. So I'm going to own 10 shares of NVIDIA. So let's say I own those shares and I'm waiting for a profit. Let's say the share price does move up. Let's say it moves up to $130.50. Not too bad, not too shabby. So let's say I want to go ahead and take my profit. So that's 50 cents on 10 shares. So let's figure out how much profit that is, right? If you take 50 cents on 10 shares, I made $5 today. Not too bad. Now let's move over to options. If I use the same 1,300 to buy one call option where the premium was worth $1,300, let's say the share price does the same thing. It moves up by 50 cents. What happens then? How much does the option contract move up by? Does it move up by 50 cents? No, it moves up by about $100. Now, how much did I make off of this trade? If I paid $1,300 and now I'm selling for $1,400. That's right, we made $100 off of this trade. We used the exact same amount of money that we used in this example to make $100 instead of $5. So hopefully from that visual, you can kind of understand why I trade options instead of trading shares. Now let's talk about support and resistance. And for that, I'll go over here to the chart. Now, before I kind of show you where the support lines are and where the resistance lines are on this 24-hour chart, let's talk about what they are. So support is where people, like buyers, typically step in, right, to start buying because they feel that at that price, the stock is trading lower or it's trading at where it's worth, where they think it's worth, and it's just generally where they like to buy. Conversely, resistance is where people think the price has reached its full potential, at least for the short term, and is generally where people like to sell. Now you know what support and resistance are. Let's look at the screen for examples. So I'm going to erase this trend line. So let's clear it. Bam. So the trend line is gone. So this is the 24-hour chart, right? And as you can see, it's 2024, February, March, April, so on, right? So where do you guys think the support line is for this chart here? Without having a whole bunch of experience, you may or may not know that the support is right around here. It did break support, but then it came right above. Another support line is right here. How do I know those are support lines? Is because you can clearly see that as they hit those prices, the price is starting moving up. Now let's talk about resistance. Let's show you some examples of the resistant line. That's going to be right here, and also about here, and also about here. Why are these lines important? They're super important. The reason why they're important is because you can see here look right here for the date. You can see in March 8th, 2024, we hit a resistance of about $95, and then we moved down, right? And then again, it moved up to $95 again. Now, the reason why they're super important is, let's say you bought that share a month ago for $71, and you want to know when is a good time to sell. When is a good time to make the most amount of money, right? Without selling it too early. Well, you would just sell it at the resistance, right? So you would buy it at $71 and wait till it got up to here and sell it for $95. Let's say you didn't sell it there, you held on to it. You could easily wait for it to move up to $95 again. Conversely, if you wanted to know when is a good time to buy a company, right? You've kind of done your research. You like what the CEO is trying to do. You could, and let's say the time is, or the date is July 2024, right? So what you want to do is wait for the share to hit support, right? So at this point, you can see that the support in August was $99. Let's say we're in August, the middle of August, right? You definitely don't want to buy it here. You want to wait till it hits support again. You want to wait till about September. That's when it's hitting support again of about $100 a share. So those are just the little touch on of why support and resistance are so important. So what triggered me today? You're still watching this video 45 minutes later. I appreciate it. So let's talk about what triggered me today and how exactly I made that $257, right? So let's go back over here to the 10-minute chart. Let's see here. All right, awesome. So I'm just gonna draw the trend lines that were on here earlier, and you'll see exactly why I was so confident in being able to buy the contracts for the prices that I paid. So as you can see here, this morning I bought 10 contracts for $17.35 each around this line, right? And then it started to threaten, it started to go down even further, right? And I was confident in buying more. Why? Because we were still above this trend line. Once we start to go below this trend line, that's when you have a good indication that the trend is now broken and we're starting to move down. So that just shows you how I was able to confidently make money today and how you can as well. But again, investing in the stock market can be risky because you can lose money. I'm not a financial advisor, so I encourage you to do your own due diligence before making any investments or trading decisions. My goal on this video was to show you how I do it and just show the principles that I use to help me profit and break it all down to where a beginner can understand. If you feel I succeeded in that, smash that like button and subscribe for more content just like this. If you want to know the best way to save extra cash in order to be able to trade more, I made a special video and I'll link that right here. If you want to see a video of mine that YouTube thinks you're most likely interested in, that'll be right there. So that'll be it for this video, guys. Peace.